General Motors is putting the pedal to the metal in its race toward an electric vehicle future. The company announced Tuesday it will invest $7 billion in Michigan, much of that aimed at dramatically boosting production of full-size electric pickups. CEO Mary Barra said the investment will benefit 4 Michigan manufacturing sites and will create 4,000 jobs.
The $7 billion investment is the largest in GM's history, and it's so appropriate that it's in Michigan. It includes a new Ultium Cell LLC battery plant, will be located near Lansing, as well as the conversion of our assembly plant in Orion Township for the production of the Chevrolet Silverado and the GMC Sierra EV pickups.
GM said its Detroit Hamtramck and Orion Township plants will be able to build more than 600,000 electric trucks a year by late 2024, including different variations of the new Chevrolet Silverado and GMC Sierra electric pickups.
And altogether, we will have more than 1 million units of EV capability in North America by the end of 2025.
Tuesday's announcement intensifies a battle with Ford for EV dominance in North America. In January, Ford said it will have the annual capacity to build 600,000 electric vehicles within 24 months. But both Ford and GM will have to contend with the current EV leader, Tesla. It will soon open a second U.S. plant in Austin, Texas, and is on pace to sell more than 1 million electric vehicles globally in 2022.
Microsoft on Tuesday released an upbeat financial outlook for the first months of this year. The strong forecast is in part driven by the company's intelligent cloud unit, consisting of Azure and server software. Microsoft offered reassurances to investors that demand in its cloud business remains strong, anticipating revenue of up to $19 billion for its fiscal third quarter. Microsoft delivered strong outlooks in other areas too. The software company has benefited from the switch to working and learning from home. The health crisis has forced that shift online, with rivals Amazon and Alphabet also seeing a jump in demand for their services. Following Tuesday's outlook, shares in Microsoft were trading 3% above the closing price. All eyes will now be on Microsoft's proposed deal with games publisher Activision Blizzard. Last week, the company unveiled plans to buy the maker of Call of Duty for $69 billion. Microsoft said the deal would help boost Xbox content and services revenue.
Another wild day on Wall Street. Stocks plunged early in the session, then climbed back, but came up short. Unlike Monday, when the Dow plummeted more than 1,000 points but regained it all to end higher. On Tuesday, interest rate-sensitive tech stocks led the sell-off. Only bank and energy stocks finished in the green ahead of the Federal Reserve's policy statement Wednesday. Geopolitical tensions in Europe dampened investor sentiment, as did concerns about an increasingly hawkish Federal Reserve, said Systematic Ventures CEO Max Wolf.
I think the Fed is kind of painted into a corner here. I think they're going to have to indicate a more aggressive stance on rate normalization. I think they're going to say things that the market are going to interpret as aggressive.
The Dow fought back from a nearly 800-point deficit to close just 0.2% lower. The S&P 500 fell more than 1%, and the Nasdaq was down over 2%. Shares of General Electric tumbled 6%. Global supply chain disruptions hurt the industrial conglomerate, pulling down its quarterly revenue. Shares of Pfizer gained almost 2%. It and its German partner BioNTech launched a clinical trial of a new version of their vaccine that specifically targets the Omicron variant. After the bell, Microsoft shares dropped, even though its quarterly profit and revenue rose and beat estimates. Strong demand for the company's cloud-based services helped grow the top line.